All right. Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for November 30th, 2021. So yesterday, we had that nice little recovery move after the harsh sell-off, right? And we said it would be important to remember that this thing can go in both directions. And so what we talked about yesterday was preparing a hybrid frog style trade, bracketing the opening and ready to go large in either direction. We said if 2 days ago was a typical move for these heightened alert times, then it could be that big in either direction again. And that's kind of what we got today. Was actually even slightly larger. And what we said was that the tell would be a breakdown below yesterday's low. So if you take a look at yesterday's low and then add the big sell-off day from last Friday, you'll see that is almost to the penny the size of the move of the runaway sell-off. So another way to have looked at yesterday's move is, you're setting up the hybrid frog, but you're also concerned now about a breakdown below the low of yesterday. And that's got to be your automatic signal that 1 day low is really crucial. So in your mind, what you're thinking about is this, and you're also thinking about this to the upside, right? So as when you're trading with the hybrid frog, and let me zoom this in a little bit. There's sort of the tactical trade that you do when you are inside yesterday's range. So when you're inside yesterday's range, you can play a breakout from that box in either direction. And that's your tactical trade. But then when you see it break out outside yesterday's range, then that's where you pick up a strong directional move, right? So in this case, it was like that. And then the size of the move, especially to the downside, is you just take that large directional move, and again, lines right up on top of that. That's how big the daily moves are. See, even yesterday's move was about that big. So what's that mean for tomorrow? Well, it means for tomorrow that if it breaks down below today's low, this thing can get down to the 5% sell-off all the way back to 450, which is a violation now of that Z2 line, which is right here. So that's in range for tomorrow. So we're going to do the same thing tomorrow that we did today, and that is set up a hybrid frog box around that open. And then if it breaks to the downside, then off we go. And then if it starts recovering, well, then it could be like yesterday's move, where you get that little bit of a gap up and you have a nice intraday move. So we're going to be ready out of that hybrid frog box, ready to go in either direction. This is a period of heightened volatility and larger than average moves in either direction. And the short-term opportunity intraday is preferred over trying to get swing trades out of this. I've just got a note from Jim Carroll, who's one of our longtime pro money managers, who has a number of systems that trade volatility. And we've never seen, in his research shows, we've never seen 3 15% moves in VXX in 3 consecutive days ever. So, to just borrow his words, batten down the hatches, buckle up for a bumpy ride. So increased intraday volatility really favors the short-term intraday trade. And that's the one we want to be ready for tomorrow. Okay. Yeah. So you can't even be thinking about returning to the long side swing, in my view, until it clears at least the Bollinger Band mean at 462. You really want to see it get above this little sell-off period, which is at about 467. So I'm listening to Ken H in the background in his head saying, how happy was he now with his exit at 466 when the PSAR flip hit. This is what it looked like when the COVID first broke, early March of 2020. This is what the start of that move looks like. I don't know that that's what we're going to get, but remember, that was a 35% sell-off. All we've hit right now is, let's see, the 5% sell-off. We're not even there yet. So I want you to just, how soon we forget what real panic selling. This big blue arrow is the 5% mark down here at 450. And remember that the COVID sell was 35%. So how quickly we forget. Huh? So this little bit of volatility that we're feeling right here, that little piece of volatility, that's nothing. That's just trading volatility right now. That's why those on the core positions, the 10% trailing stop prevents you against disaster, prevents disaster from occurring. But meanwhile, we have a trading opportunity happening right now to emphasize the short-term trade. Okay. Let me know if that helps. All right, so here's the S&P. We'll get into the sectors now. Here's the S&P at minus 1.95, the Russell minus 2%. There's DIA at minus 1.8. There's the Qs at minus 1.5. There's EEM was basically flat for the day. And treasuries up 1.5% at 151.6. So that's a real concern when treasuries, which have been disrespected, are really starting to look attractive on a defensive play. That's something to be aware of. All right, let's take a look at so that's quite a spread from 1.5 to the good to minus 2. And the fact that you've got all of the big US indexes selling off at least 1.5%, that's a broad-based panic beginning. Okay, let's take a look at the sectors that underperformed, because those are the ones that I really want to see tomorrow ready to go. So we've got energy, clean energy, finance, 2.3. I suppose we should include lumber and Bitcoin trust in there. and the large cap blended crypto -2. Then we got materials, consumer staples. When consumer staples are getting slaughtered, that's a real bad sign for the S&P, because ordinarily you would see that when the market is starting to suffer, but people still want to stay exposed and still have positions, that consumer staples are have been traditionally the best defensive play. So when those are underperforming, that's a bad sign for the market, because people are getting rid of even the defensive plays. Oil exploration 2.6, blended commodities 2.7, marijuana 3.14, commercial real estate 4.4, ouch, oil 4.5, and then individual companies that got slaughtered. Alcoa -5.3, Devon Energy -4.23, Robinhood 4%, US Steel 2.8, Cliff 2.4, Squarespace 2.13. So a lot of things getting smashed. Let's look to the upside. Agriculture only down 1.9. Blockchain, fangs, and moonshots 1.5. So those are green, but on a relative basis, right? Even wheat and precious, the precious metals were no store of protective value, 1.4. The other lumber, 1.4. Consumer discretionary, 1.35, based, I think, on strength in Tesla. The Bitcoin Trust, 1.3. Lithium and Brazil, ARC Innovation, S&P Tech between -1.2 and 0.8. ARC Genomics down 0.5. Now we're getting into the actual gainers today. S&P Bio 1%, Mexico 1.4, Ethereum and VIX 15% and 5%. So +1 to Danny if he's out there listening, and when he hears this. We were exchanged some setups on Ethereum, and we thought was looking pretty good. That was a good trade for us today. Can't really short ETHE, but you can short Ethereum, the coin, but it gave us some long side opportunities in ETHE. I'll show that here in a minute. The individual companies, Apple showing some surprising strength at 3%. TX, the steel company, 1.2. Tesla, 0.68. John Deere only lost 0.7. PayPal, hard to call those good days, but yeah. So this is a pretty broad-based weakness. And like I said, when I see the consumer staples suffering, then and VIX and Treasuries so good, just I'm sharpening my knife for short-term trading. All right. So here was the Ethereum trade, the Ethereum trust trade. So this one was a gap up. Let me get that. Basically gave me a crossing of the dragon and crossing the VWAP, taking the second position on a COTA 2 and taking the routine managerial exit for a reasonable trade here. Tried this one long, but it failed pretty quick. This is one where if I'm trading the coin, I can get short as it crosses. Where I want to get short on this one is either where I exited or as it's breaking, just for in terms of interpreting the pattern, where we want to be getting short on this is one of these entries, either right where it crosses the Bollinger Band mean, or as it crosses the VWAP, or as it breaks below the Z3 line, or as it crosses the RL270. Any one of those four is sort of a standard entry. The longer you wait for confirmation, the worse return you're going to get. I would also say, if we look at this as the collapsing dragon and bring that across, there's probably room for one more standard entry. So any one of those five positions, according to our indicators, would tell you that you can be getting short. And then when that move occurs, what you're looking for is a return down to the previous day's close, which is even off the chart, which is what you end up getting eventually. All right, so after this big sell-off, that's clearly a harsh winter. It tries to hold for a minute, but doesn't, fails one more time, gives me the RL10 rollover. So I try the SSC. I escape with a scratch. It then immediately crosses again, so I'm long. I get paid with the managerial exit. I can't get short as it crosses the Bollinger Band mean. I can't take the collapsing dragon because ETHE doesn't allow you to go short. But in terms of the pattern, these are places where I'm looking to get short. Looking to get short in here as it makes a new low of the day and breaks the previous Z3s. These Z3 excursions represent extreme prices, which when violated tell you there's more damage coming. Okay. Then this one gives us a standard SSC right here, just like it's supposed to. This one gives us the Z3 pinch breakout, and this gives us the managerial exit for a nice one. And then this one gives us a Kata 2 typical, and by that time I was content. So these two here, I guess this was a micro win, and this one was a scratch. So that's ETHE on the long side only. And this might be the reason you'd be interested in a crypto account where you can be short the coins, because there were two really good trades to the downside as well today. A very smooth and orderly mover. I'm liking the cryptos for trading in our style. All right, let's take a look at what the boys got. All right, here's Devon Energy. And we're looking at the 1 minute chart here. Nice collapsing dragon or Z3 pinch breakdown. There's the 2R level. He cashes on the, so this was down and recovering. So he goes ahead and locks it in before it crosses over the VWAP. That is very good practice. What I'd like to see is the short right here. That's a collapsing dragon. When this rejects the VWAP right there, And notice how you didn't get a PSAR flip. The PSAR just kept cruising right down. That makes this one a really good short. This is not bad. This is a new low of the day. That's worth a shot. It's a fractional loss, but having that short would give you a fractional win. That's the difference between, instead of minus 0.4, it might have given you a plus 0.4. This was a reasonable effort to try long. You're getting the SSC and you're wanting to see it get through the Bollinger Band mean, through the VWAP, beyond the river, and testing Z3. That's a good effort. -1 on the loss. And again, this is where I want to see you get. I'd like to see you get short, right? This should be a stop and reverse right now because you're playing for this move. You've got a collapsing dragon. You've got a PSAR flip. You've already had a big move down. Let's get that short here. And then when it fails, this is a fractional loss compared to this loss of 1. Now, probably a little gun shy in here. This is a reasonable. This one is a reasonable PSAR flip and go with a probable exit here. Then I want to see you get short here. Again, we've had the big move down. The move up was a lower high. That lower high makes this a kata 2 to the downside. Okay. So that this gives you like the Z3 pinch breakdown. It's already crossed the VWAP and the Bollinger Band mean. That's not a bad entry and a reasonable fractional loss, but this gets you a fractional win. And by the same token, again, when this PSAR flip happens, I want to see you getting short here rather than here. And then a second position could be done here. Third, that's a good second position. That's a pretty good managed trade, and that's a perfect exit. If you're going to try the kata 2, I think this is where I want to see you get long right here. That gives you a winning trade. Still, 2.26 is nothing to shake your head at, except in a positive up and down manner. So that's good work. Just let's get some refinements on where those turning points are. All right, this one is Riot. Let me try to make this a little bigger. Stand by. All right, so here's the this is the opening right here. And his first trade is there's this move, a low, a higher low. There's a potential move in here with like a kata 2. Now it rolls over. He notes that 3982 is the daily PSAR. When that rejects, that makes this this PSAR flip here. That's probably a good entry right there where it's crossing the VWAP and crossing the Bollinger Band mean. So a little bit later than we might have wanted. That's still not that bad. That's fine. Moved his stop to no lose plus dinner for 2 here. And I like watching for possible support at yesterday's low. So I like that. That makes this a potential second entry. But still, I like that one. There's covering for 3.7. That's a good day at work. Here's the triple Qs. There's the opening, gap down, sell off like feels like a morning hook, takes the SSC right where you're supposed to, right where the PSAR flip happens. He's using, this looks like low of the real body. You can be here, and that makes this a better trade. Reasonable second effort, but when that doesn't work, you got to be out here at the Bollinger, at the spine of the dragon, and maybe not down in here. We don't want to let we don't want that to turn into a negative trade. Unfortunately, away from the desk, and the standard trade here was, there's the rollover, there's the break of the Bollinger Band mean and the VWAP. There's a Z1 breakdown, a Z2 breakdown, a Z3 breakdown, any one of those. And then here's a 1, 2, 3 exit right here. So all those moves get exited right there. Then this becomes another collapsing drag. This was an effort to reverse and go back to the VWAP. It didn't. It rolled over. And so you want this. You could even be aggressive and add a second position here on a new low of the day, and then with an exit at the PSAR flip, and that's a good trade. Last one here's, this was Rio. And here's the Z3 pinch. Notice the descending highs. And he plays this one short on a breakdown of like the Z2 and really the previous Z3 pinch, if you take that across. And that's a good measured shot for 1.4. Nice. This one to me feels like that Z3 pinch, which we would say is fake one. And then when it doesn't break out further and rolls over, you can take the PSAR short here when it crosses the Bollinger Band mean and either hit the river or the Z2 or the Z3 with a cover down here with a 1, 2, 3. So any one of those that covers down here is going to be a winning trade also. Okay, but nice work from the guys. Quick look at the daily reports now. Still bullish normal. The oversold is starting to get painful. The 30-day is below. It's in the lower half of neutral. That's painful. And even the 90-day has now come out of the overbought. So 4 signs of weakness there. The risk Z clearly giving us some indicators. SPY, DIA, MDY, and the channeling and overreactions. Again, I would be playing this as an intraday trade only. Then if I made money on the long side, then I would keep 20% and treat it as a standard swing trade entry. But I'm not going to blindly buy the open tomorrow. Apple showing strength. Tons of channeling and overreactions, not a surprise. A bundle of excellent auto framers. Excuse me. ETFs, the same thing. Tons of auto framers. Lots to choose from. Treasuries to me is compelling. And Mexico also. Strong move today to the upside. And it's a great hybrid frog trader. Again, you can see the auto framers, the place to be right now. You've got some amazing reward to risks that are better than 4-1. So that's pretty nice. With lots of good indexes in there, emerging markets and the Russell, the mid caps really get my attention. No squeezes today because of the expanding ranges. Mostly fall and winter, only treasuries. That's the tell. Home Depot and Apple showed strength today, and little else did. Ethereum and Apple, treasuries, and Mexico. So Mexico's of interest. A frog champion, a broad index, an emerging market. That should be on your short-term radar. Trouble in River City. We just went below the long-term, 180-day average here. The slope of the RL30. This is when it goes negative at the dotted red line. Pretty reliable indicator. When this thing reverses over its own 10-period moving average outside of that yellow zone, that's a shift in market condition. Chart number 2 shows the 180-day time series trend line slope within a statistical framework. Changes of direction after an extreme reading are confirmed when the blue line crosses the 10-day moving average, black line. This has been a good early warning change of trend. Yes, it has. This is where that happened on the zoomed in chart. So this price action looks different than all of this price action. That's why I pay attention to this chart. Market condition. Volatility on the rise. Testing the bottom of the river, like we talked about earlier last week. RL30 from a peak has now come back inside the yellow river. So this is a natural place for it to find support and make this kind of a run like it did here. Like it's done all the other times it has tested the bottom of the river. So we're about ready to see what happens this time. And again, if it doesn't recover, then it feels more like one of, it'll feel more like one of these moves to the downside. So critical state happening right now. All right. That's everything I got for us tonight. Thanks for your hard work. Let's sharpen your knives. Be ready for them tomorrow. Another hybrid frog day, intraday focus primarily. Special times. So what we want is standard work during abnormal times. That's what we want. All right. See you tomorrow.